If you had 500,000 shillings to invest today, gut instinct, no overthinking, no chat GPTing, where would you put it? Okay, so I'm going to give you a few options. Raise of hands if you would buy some real estate in Kenya, buy some land, develop it, overpriced apartments. Anyone? No, not interested? Interesting. Raise of hands if you would invest it in agriculture. Get a farm. Yeah, we have some farmers here. I love it. I love it. Raise of hands if you would invest it as an angel in a tech startup. Probably not my company right now. I won't start pitching. Yep, a couple of you. Nice, nice. Raise of hands if you would invest it in stocks or treasury bills or in the market. Interesting. So we have a wide spread of investors here. And this segues really well into this next panel, which is how do we build trust when it comes to investing? How do we choose wisely? And how can we invest without feeling like we're taking a blind leap of faith abroad? So I will be your moderator for this panel, and I'd love to invite my panelists. Suleiman Isah, the immediate former commissioner, Tech and Digital Economy, Niger State, Nigeria. Round of applause as he comes up on stage. And also Brenda Mbathi, Chief Executive Officer at TRIFIC says. Round of applause as she also comes on stage. Good morning to you both. I'm going to hand over the mic where you'll get an opportunity to represent yourself and where it is that you're speaking from.
Thank you. Good morning, everyone. My name is Brenda Mbathi. I am the CEO for Two Rivers International Finance and Innovation Center. So if you can remember that, congratulations. If not, call it TRIFIC. And we are a special economic zone. We are the only privately owned, bespoke to business services, special economic zone based at Two Rivers ecosystem. If you know where that is, it's just still in the UN Blue Zone. I'm also the Vice Chair for the Kenya Private Sector Alliance. So I do have some knowledge about cross-cutting industry issues. And that allows me to work at the intersection as the private sector, also with government. I mean, it's such a joy to have Piers, although I call him Pius, but Piers sitting here talking about investments, because I can testify about the good work that Ken Invest does. I've experienced it. We've worked with Ken Invest as a partner. Highly encourage you to, in some form or fashion, get involved in their investment conference in March. They're co-creating. They're open for business. They're open to ideas. And as he said, side events. But come, show up and see who's there. And it's interesting that we're here today to talk about the diaspora as a unique set of investors. Because diaspora are diaspora, but ultimately they are Kenyans, they're Africans. They have that link to home, to the African soil. But yet, because of the distance, they are sometimes fed with information that is perhaps not 100% what I'd call trustworthy. So especially when it comes to mobilizing capital, I think the one thing I'll be talking a lot about today is trust. And a lot of people have felt pain because trust has not gone well in some form or fashion. And that's why it's so important to look to institutions that you can trust. And so even if it comes to investing in real estate, trust. And I'll do a shout out to Mvita because they're here and they're sponsoring you. So it's about look for where you can trust, okay? Then Ken Invest has their one-stop shop, so also use them. And as we talk more and more, I'll talk about how we, as a special economic zone, privately owned and developed, we also have our one-stop shop. So we are eliminating that issue of trust. So some people, even though you'll be told you can go to Ken Invest or you can go to the CES authority, they look at you because they're actually, let me tell you, you heard him say where his offices are, right? You guys are diaspora. When you're told Old Mutual Building, you already start to have issues, right? But if you come to us, we actually go there for you. And so we even cut out that. We are the true interface so that, you know, some people we say we will interface between yourselves and government and walk the journey. And that's what we've done. And because we've managed to do that, and I'm sorry for going on and on, but I'll talk to you, there's a reason why. We have managed to fill our first product, the TRIFIC North Tower. And if you read in today's paper, this week we launched our US dollar-backed green IREIT. So another investment instrument that you will be able to invest in through the Nairobi Securities, US dollar-backed, guaranteed and underwritten, and then so there's a lot of trust within that platform. So yes, you might want to go full scale and own real estate, but the one thing that we need to develop also in the market is the market of IREITs, where you can own a portion of a real estate vehicle that is still making money for you. And we're looking to give dividends twice a year in US dollars because guess what? I collect rent in US dollars. Thank you.
Thank you so much for that powerful opening. Now I'm going to hand it over.
Okay. Good morning. So my name is Suleiman Isah.
Say that again.
Suleiman Isah. Yes. Up until September 1st, I was the Commissioner for Communications Technology and Digital Economy in Niger State, Nigeria. Prior to that, I was working for the Federal Inland Revenue Service of Nigeria. That's like the equivalent of KRA. So by the side, I do agriculture, a lot of agriculture. So that's why that's the only sector, 500,000 shillings is small. So the only sector I can actually 2x, 3x that in under 3 months is agriculture. I would rather do agriculture than be a VC. Sorry for the startups. Then on the tech side, I do telecoms also, because one thing Africa is not looking at is the infrastructure. We are trying to grow our technology, but which infrastructure are we riding on? So that is also missing. So I would also stress on trust, but two-way trust when you talk of raising capital. Because the issue now is those in diaspora don't trust where they are sending their money to. Sorry, I believe Africa is a country, not a continent. Because what applies in Nigeria tends to apply almost everywhere I go to in Africa. Black tax. You have relatives calling you from home, we want money. It's everywhere. African time is not Kenyan time or Nigerian time. It's all across the continent. So we have uncles and aunties you send money to, buy me a plot of land, build me a house, and you come and you don't see anything. So that issue of trust is there. Then for we that are on the continent and willing to accept the money to invest in, how do we know your money is not from COVID-19 fraud? That I would now trust you enough, put your money in my business, and when Interpol comes for you, my business goes. So the trust has to be two ways. So thank you very much.
Thank you so much again for that powerful opener. So what's the key word for this session, guys? Thank you. Starts with a T. You got it. Brilliant. So I'm going to start off with a bit of a personal question so that we can all get to know just your inspiration behind what it is that you do. And I'd like to ask you, what first sparked your personal interest in helping diasporans, especially when it comes to investing? So what is that personal story behind the roles that you've had across your amazing careers? I think I'll start off with Brenda.
I'll have to be honest, I never took this role with the intention of helping diaspora investors. Okay. To be fair, when I look at the work we do, it was actually to help create job opportunities and employment for Kenyans to export their amazing talent to the rest of the world. And that's what we do. It's the export of services. Now, in doing that, we have come across a lot of diaspora who've actually come and said, you know, there's opportunity. The work that we do where we are, I have a company, I want to set it up here, I want to hire Kenyans who'll be able to do this work and export it to Australia, to Finland, to the US, and we have those firms, those tech firms, etc. We've actually helped to recruit Kenyans to work for different firms. But now when we look at, so that motivation initially was to actually create a vibrant, working, special economic zone to take advantage of the export of services. Because services, by the way, Kenyan services actually is growing at a faster rate than agriculture in terms of how we export. So we know that we export tea, coffee, apparel, etc., etc. What many people don't realize is actually what is growing at the fastest rate is the export of services. Now, I'm not talking about creating the diaspora who will actually leave this country and go and work possibly in the Middle East, in the Gulf states, because that's also growing. And that's a whole category of diaspora that also needs to be addressed because they are sending a lot of remittance back home as well. But it was about creating the opportunity of Kenyans living in Kenya and exporting the services. Now, what we have done is it was a real estate play. We filled our North Tower with different businesses, including the world's #1 BPO as the anchor tenant, creating thousands of jobs. Now, what we've done is, rather than just sit with that asset, because that's what a lot of people do, don't they? You get an asset, and you just say, this is wonderful. I'm going to sit, I have a house, this is wonderful. We are now putting that out back into the market in the terms of an IREIT. So people can own a bit of that asset where the rentals are paid in dollars, and that's now when we're going to be attracting that diaspora inflows and coming, giving them an instrument that they can trust and invest in. Long-winded, right?
No, that was actually really powerful because when people think of capital, they think money, right? But actually there's human capital, right? So quick quiz for you. I'm a founder, I run a business. Guess what my biggest costs are? Employment, right? It's people. And it's people who now work in a global world. Therefore, what I'm paying them has to match those standards. Now we have the Googles in the country, we have all these big tech companies. Therefore, as a founder, I need to make that work. And that's why you see founders raising millions and millions of dollars. It's for people, right? And this leads on into my next question, which is for you. And you mentioned something which was really interesting, which was around essentially due diligence as an investor and how due diligence works both ways. It's not just the investor, but it's also the person that's actually going to be working on that project and executing. So as diasporans who want to invest or even want to execute, how do we go about that due diligence, AKA building trust?
Okay. So there is a slight difference between Kenya and Nigeria. For example, your major cost is human capital. For us, our major cost is power. We have the population. So, okay, thank God, Kenya Invest is not here. You can actually move your headquarters to Nigeria and lower the cost of human capital. So, issue of due diligence. From my experience in government, what I realize is the major challenge we have is guarantee. So the guarantee is where the government comes to play. There is a lot of capital if you are able to provide sovereign guarantee. So sovereign guarantee being that Kenya, for example, is the collateral, the country. So no matter what happens to the ruling party, politics, we know how unstable Africa is when it comes to politics. It's only Africa that institutions are built around people. So once you remove that person from power and bring in a different party, 80% of the government goes, a fresh policy comes. So if you don't have that sovereign guarantee where the country is the bond, so no matter what happens, that's the first aspect of due diligence for the investor. So whatsoever I'm doing has to be tied. So for us in government, what we did in my state, because Nigeria is actually a federated country, so we have 36 states that are autonomous from the central government. So what we did as a state was we provided the sovereign guarantee, took the funds from a Chinese development partner, so it was development financing. Then that fund was open. As an investor, you can put in that money. Then we do the local due diligence. We don't fund ideas. You have to be in the market for you to get funded. Because part of the problem with most African startups is everybody comes with a very beautiful pitch deck and a beautiful idea, go for GITEX in Dubai, get small funding. I don't know, do you guys do Dorime? Okay, so you enter clubs and you start packing champagnes and all that.
We're learning from you.
Oh. So, but what we notice is people that are already in the market usually tend not to do that much, even though they will do slightly, but not much. So that's where that due diligence must be done by government, not by individuals. That's where the investment authorities come to play. Your identity systems. As a startup founder, what do you have as your own guarantee? What happens if, let's say, for example, I'm able to raise $100,000 today and I decide to move to Canada? Who can recoup that fund? It's definitely just the government. Because if you say the banks, I've already moved my cash out, I'll probably go 5-10 years, I have citizenship of another country. Who is going to write to Interpol to have me extradited? It's the government. But if in the first place, the government was not aware of your business or your investment, what guarantee is there? So that due diligence aspect of it must be done and handled by the government. And even the government shouldn't just do it and give you the paper report. That's where the sovereign guarantees come. So if it fails, the government is actually going to refund the investor to what was agreed on. Then the government will know how to recoup their money. Thank you.
Thank you for answering that question. Thank you. So I guess my next question is going to be more around success stories that you've seen, Brenda. And you did mention around owning an asset and owning like a small part of it, which was really interesting because Nancy literally asked if I had 100,000 or if I had $1,000, where can I invest? Because sometimes it seems like the money that we have is still too small to be called an investment, right? So in your experience, what success stories have you seen or examples that you've seen, and what made them succeed?
Thank you. Success comes in different forms, and it depends what you're looking for. So somebody might say, I want to create more employment, then you look at those numbers. If it's a return on investment, then you're looking at those numbers. I think one of the things that you're looking for is proof points. So before somebody wants to invest, they want proof that the person or the place that they're investing in has been successful or is trustworthy. Because it could be the first that, what is the record? And hence the reason that, and Suleiman mentioned, government, it's about, do you go to the likes of Ken Invest and ask for any sort of due diligence? So even ourselves, when we look to onboard a client, and by the way, you see many people who come in to tell you that they're eligible and should be operating within a special economic zone. You must be eligible to operate in a zone. You don't just come and say, I can be here. There's a criteria. And we do a very thorough due diligence check. And then in turn with our regulator, we do another one and they do their own. So it's very thorough because you can't afford any surprises. And so that when you're building this asset, and I come and say, here's the asset, with 32 clients, even those people who are going to invest in the asset want to check that each of those 32 clients is credible, has a good background, etc., etc., to keep the I-rate vibrant and working. So success comes from extreme due diligence, because there will be slips. And once you slip, so the diaspora will tell you, so you have the black syntax, so we all know that there are many disaster stories. There are also some good proof points. Not everybody has rogue relatives. Some have some that actually will build or do what you say. That you will go to different housing estates or developments. You will know from the history of the developer, is this something credible? Is this something I can trust? Is this something I can put my money in off plan? And you'll also know the ones where you need to be more cautious. So when you say, what are the success stories? I would say for the diaspora, a lot of it has been in real estate, okay? Real estate. And if you go around our city today, Nairobi, this city, you can see there is still a lot of development taking place. Somebody is buying those units. And I can take a guess, because I'm not saying I know, that a lot are diaspora. Now, which diaspora? I'm not going to say, because we've heard stories, and as you say, there's due diligence both sides. If you come from a certain state, starting with M in the US, maybe, people need to watch, because, where are these cash flows coming from? But diaspora, why do you like to invest in that sort of an asset? It's because it's tangible. You can see it. That feeling of ownership, it's mine. That's the beginning of the story. Then you have to, as diaspora, start asking yourselves, when you're looking at these units, how sustainable is this going to be? Because a lot of the times you're not actually staying in it, you'll be renting it out. So that's when, again, you do due diligence. Who are the people managing the building, et cetera, et cetera. Because even that asset can deteriorate very quickly if you don't make the right choices. So when you talk about success, I'd have to say it depends on your threshold. I know we've talked about tech, and we've said tech, people are worried about the ROI. I think that requires more patient capital, as it's stated. That's not a quick turnaround. But there are those who've invested in tech companies who've done extremely well, but they've been patient. So it is a matter of being patient. Know yourselves, your own risk profile. Where am I comfortable spending what I'm comfortable in? Finally, sometimes misery likes company. Or success likes friends. So if you get together as a group and you trust each other and you collectively go and invest in an instrument, be it an apartment, be it stocks, etc. When it's good, you'll have a party and pop the champagne. When it's bad, you feel the woe, the remorse less, because it was a shared risk. It wasn't all your money went down, it was a bit of your money plus 10 others, and you had a collective responsibility to it. And that sometimes is the way to go, especially when you're starting, because you learn a lot from each other, and it's a shared, distributed risk.
Thank you so much for that insight. Before we wrap up, funny story. So my mum was my first angel investor. She gave me exactly £1,000 when I first started. And I think in her head, investing in a company was like receiving dividends every month. And I remember after 3 months, she was like, where's my money? I said, well, you've invested it. She was like, yes, but are you not going to give me like £50 every month? I said, no, mother, it's going to take about 5 years before I can give you that money back. And she is a traditional, get some money and build flats in Kenya, right? And that's what gives her joy. She goes home, she sees the apartment, and she knows she's invested in something. And that's actually a really important point, which is what kind of investor are you? Do you want quick returns, which means higher risk, right? Or are you willing to go the route of patient capital, which takes a bit longer? And now I'd like to throw that question back to you, because you're coming from a perspective of a different market, which is West Africa. What have you seen that has worked in your market?
Okay, so the West African market, or let me use Nigerian market, which is like the largest market, there are two sides to it. You have the short term and you have the long term. For short term, what we tend to say is by grace. Yes, I know the number of billionaires that were made because of COVID. In my primary sector, that's telecoms, a lot of us were struggling, deep in debt. Lockdowns happened, and you have an investment with a long-term focus of 10 years, and you're making that 10 years focus in 3 months. Yes, a company that was making barely 150,000 naira, that's like, let's say, 12,000 shillings per day, jumped to 30 million.
Because of lockdown.
Yeah, because of lockdown. Everybody was on the internet.
Yeah.
Calls and all that. So that's short-term grace. So, but for our market, and when it comes to regulations, I'm a politician. I'm not proud to say this. Our markets are not straightforward. In Kenya, you might get some licenses in 3 days. I know Rwanda, for example, if you use a rainbow, 6 hours, you have your licenses. For us, it depends on who you know, not what you know. So it's a very tricky market. You can go in and make your short term very fast. But long term, if you are patient, if you can stretch, and if your capital can actually stretch, because of the population, you are able to make more compared to going elsewhere. Like I always tell Kenyans, if M-Pesa had come to Nigeria, they would have left Kenya. Not to talk of the whole East Africa.
Because there's more people,
yes, the
more
population, the more people,
right?
more people, more transactions, and the fintech space in Nigeria is not yet scratched because we don't have financing plans. If I'm
most unicorns.
Pardon?
But you have the most unicorns.
Yeah, we have the most unicorns, but those unicorns haven't even scratched 5% of the market. Because let's say fintech, for example, now, if you want to get a smartphone, we don't do contracts. You want an iPhone 17?
Buy cash.
Cash. You want a Samsung? Cash. So the common man driving Boda Boda and Co cannot afford those. So you just have about 4% of the population being able to afford high-end phones. So imagine if there is a financing system where even the low and mid-income
could afford it.
Yeah, could afford a financing plan. It's not just about the devices. What now happens to the fintech space? We're still a heavy cash-based economy. I'm sure if you follow financial news, you'd see our central bank was even issuing regulations about the volume of money you can withdraw. And we're still doing that. But here, everybody is just M-Pesa, M-Pesa. So imagine if M-Pesa had gone to a market of 230 million people, that you still have about 35% unbanked. So for the West African market, you can play the long game, and you can also play the short game. The short game is riskier, if that word exists. So because of regulations. When government changes, you're out. That's why I said,
So
I'm
you
sorry
have
for
about
this
4 to 5 years
4 to 5
to
years.
figure it out.
No, you have 2 years.
or even less.
2 years.
Yeah.
Our political cycle is usually 2 years. First year, 4-year tenure. First year, you learn the ropes. Second year, you do your work. Third year, you start campaigns. Fourth year, transition. So it's just the middle two. So that's how you play your short term. Then your long term is you try as much as possible to avoid politics and do long term. For example, a good case study is OPE. OPay today is the biggest fintech in Nigeria, but it's Chinese capital. That's what a lot of people don't know. It's Chinese capital. And like I told you, in my own state, we also went for Chinese capital because they are giving us 4.5% per annum, 3 years moratorium, pay over 15 years.
For context, in Kenya, it's around 16%. So there's a...
Yeah, okay. For us,
big
commercial is 28% if I was going to a bank. So if I have 4.5%, why won't I go for it? So OPay actually started as a bike hailing service. So that way they were able to get people to install the app. Government regulation happened overnight. So you see where issue of short-term and long-term comes. Lagos state government, like I told you, we're a federated state. So states determine their laws. Just woke up one day and said, in the next 24 hours, no more motorbikes.
Wow.
So you can just go up and read about O-Ride. That's how they started before moving to OPay. So for West African markets, you can play the short and make because of the population. And you can also go long because of the untapped market. Thank you.
Thank you so much for giving us an insight. I would love to stay here and talk about money, guys, as I said, my favorite topic. A round of applause for our panelists, guys. Thank you so much for joining me here this morning.